right, welcome to The Explainer. Today we are diving headfirst into a massive, high-stakes corporate war for control over Ethereum's future, a battle that could seriously reshape the entire digital asset landscape.
So, let me ask you a question. What if the internet itself could generate a steady, reliable yield, kind of like a government bond? Now, that might sound like science fiction, right? But it's not. It's the core idea behind a huge shift happening in crypto right now, one that's turning the Ethereum network into a global, yield-generating machine.
Okay, so to really get what's going on here, we've got to talk about the prize. What are they all fighting for? Well, it's a concept that's turning otherwise passive digital coins into active, income-producing assets. ETH staking.
So what exactly is staking? Well, think of it like this. You lock up your Ethereum to help keep the network secure and running smoothly. And for doing that, the network pays you rewards. It's kind of like earning interest in a high-yield savings account or on a bond. It literally transforms an idle asset into one that generates passive income.
And believe me, this is not some niche little hobby for crypto nerds. As you can see from this quote from BitMine's Tom Lee, this is a dead serious, multi-billion-dollar corporate gold rush. The biggest names in finance are racing to capture this new digital bond market for their investors.
So in this massive race for yield, three corporate titans have really stepped into the ring. And what's fascinating is that while they're all holding billions in Ethereum, their game plans for winning this war totally different.
All right, first up, we've got Grayscale. You can think of them as the incumbent champion. They're not just talking about the future, they are in the game right now, staking ETH and paying out rewards for their investors. And man, Grayscale has a huge head start. They've been live since October of 25 and have already paid out almost $8 million in rewards. With more than $13 billion worth of Ethereum under management, their ETF is already battle-tested. They are, without a doubt, the one to beat today. Okay, our next contender, well, they need absolutely no introduction. It's BlackRock, the undisputed heavyweight champion of traditional finance, and they are throwing their massive weight into the crypto arena.
Now, here's the thing with BlackRock. It's all about their insane scale. They've already got over $13 billion in their Ethereum ETF. But, and this is a big but, they haven't started staking yet. They filed the paperwork back in November 25, so you got to ask, what happens when they decide to flip that switch? Their position as the go-to gateway for big institutions and your 401k, they could just swallow the market whole overnight.
And then we have our third contender, BitMine. Now, these guys aren't a Wall Street legacy firm. Nope, they're a crypto-native company, and they're coming at this from a completely different angle, building their own tech from scratch to get a unique edge.
Yeah, BitMine is the real wild card here. Their strategy is just different. They're building their very own validator network called MAVAN. Just think of it as their own private set of computers crunching the numbers, which gives them total control and efficiency. But here's the real kicker. They're planning to pay shareholders a direct cash dividend from the profits and reinvest some rewards to grow their stash even bigger.
Okay, so now let's put these guys head-to-head and look at the financial firepower we're talking about. Because honestly, the numbers are just staggering. Just look at this. When you add up the projected annual rewards from just these three players, you're looking at over 1.4 times billion dollars a year. That's the prize. That is why this fight is so incredibly fierce. All right, so this table really breaks it down. You can see their ETH holdings are all pretty close, right? Which means their projected annual rewards are all hovering around $500 million each. But check out that third row. Grayscale is the only one who's actually paid anything out so far. And that last row, that's the real story. It shows that huge strategic difference between BitMine's dividend model and the more straightforward pass-through that the ETFs are doing.
And this right here is the fundamental split in strategy. You've got BitMine, which is basically positioning itself as an income stock. They pay you a cash dividend, which is awesome for investors who want that regular paycheck. On the other side, you have BlackRock and Grayscale. Their model is all about distribution. The rewards they earn just get pumped back into the fund, making its value go up. That's perfect for investors who are playing the long game, focused on growth.
So, let's look at the timeline of how this race is actually playing out. Grayscale, boom, they got that critical head start in late 2025. BlackRock threw its hat in the ring just a month later. And now, all eyes are on the first quarter of 2026. That's when BitMine is set to launch their MAVAN network and officially jump into this fight. Okay, so you might be thinking, this is all interesting, but why should I care about some corporate battle? Well, It all comes down to a really powerful idea in economics that could have massive implications for the price of Ethereum itself. And that idea is called a supply shock.
When you put them all together, these three giants are sitting on almost 11 million ETH. Now, if they lock all of that up for staking, they're essentially pulling over 8% of the entire supply of Ethereum right off the market. And you don't need an economics degree to know what happens next. When supply shrinks and demand stays the same, or even goes up, the price has to follow.
And that's really the heart of the argument from guys like Tom Lee. The whole thesis is that once you lock up 5% or more of the supply, you create this kind of infinite scarcity. And that could be the rocket fuel that sends the price of ETH to a whole new level.
All right, so the stage is set. We know the players. We know the billion-dollar stakes are crystal clear, so it all comes down to one final question. Who is actually going to win this war? Which strategy comes out on top?
Well, the truth is, it might not be that simple. There might not be just one single winner. If you're asking who's winning right now, it's got to be Grayscale. They're the only ones actually paying out rewards today. But if we look ahead to 2026, BitMine, with its totally unique dividend and compounding model, looks like a serious disruptor. And, of course, for the mainstream investor, you can never, ever bet against BlackRock. They are the trusted gateway for all that institutional and retirement money.
So, at the end of the day, this billion-dollar showdown isn't really about one company winning. It's bigger than that. It's a fight to decide which model becomes the blueprint for the future of digital assets. Is it going to be the live yield from the first mover, the future dividend from the innovator, or the raw power and scale of the Wall Street machine? The answer to that question is going to define how we turn the internet's most valuable assets into the world's next generation of bonds.